Good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Thursday, March 22nd, 2018. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. The previous session, we got our FOMC key level there. 27.31 is what I have for the 1 o'clock open price. You can see that by the end of the day, price had left a rejection tail above the previous session's high price and then closed lower. And that right there in a downtrending market is typically indicative of new lows, and here we had just reached fresh new lows within this down move, and there could be more downside into 69.25. Primarily speaking, the initial idea was that this new rejection here off this new high would lead price back toward 27.03 with a shot to see a continuation and to take out this previous low. That's basically 26.50. That and any push into 26.16 here, that LVN could provide a nice bounce back toward 27.03 and this FOMC key level of 27.31. So right now the initial move is down away from the FOMC key level. This suggests more downside until you see rejection. Once you see rejection, we could be making a return to that key level. So right now, the early level to watch is the previous 2-day lows here. Those 2-day lows, basically 27.10, 27.11. That zone right there, basically that area is where bears need to keep price below. And right now, we are clearly below that zone, trading 2700 quarter right now, and could see more weakness ahead. Getting back above, obviously, that zone could lead to a short-term push higher. But again, remember, we're right around this 27.03.75. That's right at the center portion of this larger range and of the middle range. I mean, we're right at the middle. And so at some point, we got to get a move to an edge in order to see a nice return back toward value. So that's what we'll be waiting for as well. But right now, short term, as long as price holds below that 27.10, more downside could be seen into 69 and into the recent low of 26.50. All right, taking a look at the NQ, very similar behavior that we've seen, only this one here came off that 7K 70.50 level, right? 70.47 was where we were holding here. I mentioned last Friday that if we fail to hold 7,000 next week, we could be looking at a significant return back towards 66.53. That is still in play, and after we broke through Monday, I mentioned any bounce towards 7K could be a selling opportunity for a continuation to 66.53. So far we're still in working within that framework. You can see here the previous session had a failed new high, and that's leading to new lows. So again, we could be looking at more weakness as long as price remains below 7K. The initial move away from the FOMC key level of 69.17 is down. Today, the retest was also defended again. That suggests more weakness until you see rejection, at which point you likely see a high probability return to that key level down the road. So we'll keep that in our primary sights. If we look here at gold now, gold got a big time push higher. Remember, I was mentioning before that we had this rounded behavior here. We have clear support, but it didn't appear ready to break right away. I was still holding off, and instead got a big rally through the previous close and rallied back up. Did not break down. Still has the framework of the rounded top type of pattern, but again, the overall distribution really relies on the support. Failing to hold that level would auction prices back across the previous price distribution. Otherwise, I mentioned before, there's always an opportunity to bounce back toward highs. So this right here got a big stop run day above the previous month's close. Any pullback to 1320 could be a short-term buy, but again, we're inside this compression, and that is not the easiest to trade. It's better to trade the edges or look for expansion. So right now, still being patient with gold despite the short-term upward bias. So as long as price can hold 1320, we could see more strength toward 1343, maybe even as high as 1360. Let's take a look at crude oil. Here's crude oil. Very nice solid rally we've seen over the last couple of days. On an intraday perspective, this thing has been very, very bullish. If you recall here, last Friday we had a big day up here. Monday, I mentioned that a pullback towards 62 or below 62 to defend that area could be a great buy for a continuation into this edge right here. And we got a little bit lower than that 61.87 or 61 and change that we were seeing there, but we got a little bit into that previous month's close, and that was the trigger that really did it. We saw a big time lift off that area, and got a solid push through that 64.24, and is now approaching the upper edge of the range at 66.29, which could be the swing target ahead. Today's pullback has given us a return right to the midpoint of the previous session after a failed new high. So anytime you have a major uptrending day like this, a major unidirectional day, if you see a failed new high, there's a high tendency that you're going to get a pullback to the mid. That can be a short-term counter trend trade. And again, that also offers an opportunity for bulls to defend and look for another continuation toward new highs. So that's the zone to defend right now as bulls look to turn this thing around and push it towards 66.29. So overall, still strong in crude oil as this continues to approach the upper edge of the key range. Taking a look at Bitcoin now. Here's some Bitcoin. Basically, this one right here has continued to chop around that 9K level, has been above it, has been a little below it, been back above it, now back below it. Really not showing a whole lot of decisiveness, but what we do see is a lot of compression. I mentioned that on a 3-day range basis we had some significant compression. Now you can see on a 5-day range basis we also have significant compression here over the last 5 to 6 days. So this is really narrow compression, and that should suggest that we see expansion at some point. Now 9K has been the big level, so above 9K opens up a return back toward 11.3 to 12K, right? That's what we're looking for. But if we can't get back above 9K, then this recent low is at risk. That's about 58.80. So again, we could be looking at a push down toward those lows if this thing cannot reestablish above 9K. Right now it's doing a good little chop right around that area, and at some point we'll see that decisive move. So again, continuing to compress right now. The FOMC key level here is 88.90. Again, that's a very important level. If we were to sell off away from that level, once this thing is done selling off, there's a high likelihood we bounce right back toward it. Same thing if this thing were to be taken bid and rally. Whenever it rejects, high likelihood it comes right back to that level. So keep that level marked on your charts. Alright, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.